Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to this special CNBC TV18 presentation. We are discussing the annual KPMG CEO Outlook report. Indian CEOs are confident about their company's prospects in 2018. They're equally confident about the global economy, but a little less confident about the Indian economy. This is the key finding of the KPMG survey conducted amongst top CEOs across sectors. The survey was conducted from January to February this year, and it involved over 1,300 CEOs across 11 countries and industries. Here are the key findings from the India CEOs who were amongst those surveyed. An overwhelming 91% are either very confident or confident about their company's prospects. This optimism drops a little bit when asked about prospects of their respective industries. Nonetheless, over 80% are hopeful about their industry's growth trajectory. When asked about the prospects of the global economy, a majority of nearly 90% are either very confident or confident, but this level of optimism drops considerably when asked about the prospects for the Indian economy. 31% of the CEOs said they were neutral, and the remaining 69% remain confident about the prospects for Indian economy. So how are Indian CEOs targeting growth? Mergers and acquisitions are certainly not in vogue. A majority of 82% have either low or moderate appetite for mergers and acquisitions. To discuss the report, the KPMG Outlook CEO Outlook report, we have Mr. Arun Kumar, Chairman and CEO of KPMG India. We have Rashesh Shah, Managing Director and CEO of Edelweiss Group. And we have Sumir Chandra, Managing Director at HP India. Gentlemen, good evening. Thank you very much, all of you, for being here with us on this special show. Mr. Kumar, let me start by asking you to just explain the methodology behind this report, how this is different from the last report, and to you, the most important finding.
Okay. So the KPMG runs this report, it runs a survey every year. We survey about 1,300 CEOs globally in 11 countries, and India is one. So we had 125 CEOs in India. The size of the companies are $500 million and above, going to well over $10 billion. So we get the larger companies captured in the survey. I have multiple questions, issues about what are their top priorities, where are they spending their time, is it on technology, is it on geographic expansion, is it on M&A, and so forth. What we find is that there's been a fair degree of consistency year over year, certainly over the last 3 years. 3 years ago, there was an obsession that you better get moving with technology or it would be too late. In fact, the report was titled Now or Never. The next year, we found that companies had already gotten into technology, and majority of them were of the view that they should be disrupting rather than be disrupted. And this year, they're working through it, and we call the report Growing Pains because they're tackling the issues of working through new technologies and the changes that are needed. The other interesting point I would make is that there's a fair amount of consistency between Indian CEOs' concerns and global CEOs' concerns.
Sure.
So there aren't that many differences. For instance, optimism in the global economy. Generally, this year we found a huge increase in optimism. Last year it was like 63%. This year it's 89%. That's a pretty big jump.
Well, there is a drop as far as India is concerned.
But that's, however, what I want to say is that out of the 11 countries, about 4 major economies also had the same sense that their economies, they had less confidence in their economies.
But what does that tell us, I mean, according to you?
It tells us in India, considering that was the survey was done early part of the year, we were just coming out of the GST implementation, etc. So those could have been some of the concerns that they had. But I would not generalize that too much because, as I said, many other countries also there was a
dip as compared to the last year.
The paradox is that people felt very good about the global economy and were much more cautious about their own country's economy. And India fell into the same.
This is the 4th edition of this report, right?
The 4th edition.
I mean, is there a way to measure what has been said in the report? I mean, is this essentially looking ahead? Is this looking back? What exactly?
It's certainly looking ahead.
Yes.
So we look to the next 3 years and say what are companies projecting for the next 3 years, what are they going to prioritize for the next 3 years.
Right.
So it's really looking forward.
Right.
But what I said was that when you look at the last 2 years, you find some continuity and evolution in what they said earlier and what they moved on to do next year.
Let's bring in our other panelists as well. Rashesh Shah is with me here in our studios. We have Sumir Chandra of HP, who's with us in our Gurgaon studios. Mr. Shah, to you, the point about optimism about India dipping a little bit as compared to last year. Do you sense that at all in your business?
I think if I talk about my business, which is in financial services, there is a lot of, everybody's very upbeat. But I think in a way, the finding of this survey seems to be what the underlying mood is, because we are seeing that there is a clear uptick in earnings, corporate earnings. There is an uptick, people's top line margins, profits are growing, but people are still not upbeat. So we call it uptick but not upbeat yet. And the part of the reason people are cautious about India as a whole are the macroeconomic headwinds that we are facing. Oil price, interest rates going up, liquidity, rupee is under a little bit of pressure. So that makes them cautious at an overall macro level. But individual industries, whether it's automobiles, whether it's cement, whether it's financial services, our industry, they're all doing very well. I think in financial services, average, private sector, NBFC or bank is showing 20-25% growth in profits. And
that is the strongest part of the economy, maybe.
I mean, it is, but actually auto is also not doing badly. Auto is doing well. Cement is doing well. We're seeing a lot of other sectors which are also doing well from a growth point of view. Even real estate in the last quarter, we have started seeing an uptick in that. So I think it's spreading. I think there are actually many parts of this. Steel is doing very well, and we are seeing a clear uptick.
So you're saying that the dip may be related to macro concerns. Oil, maybe, for example, is the biggest macro variable for India. That's gone up quite a bit. So it could be those things. Let's get Mr. Chandra into the conversation as well. Mr. Chandra, I mean, just to finish that point out, 89% of the CEOs surveyed expressed confidence in the global economy, while only 69% seemed optimistic about the growth of Indian economy. You heard Mr. Kumar and Mr. Shah here. But does it seem a little strange to you? The global economy and confidence in global economy should act ideally as a tailwind to Indian prospects, right? But what we've seen is global growth has picked up, and we see those in numbers as well. But the growth, although it's picking up, the Indian growth, it's kind of lagged behind as compared to, for example, the previous cycle. Your thoughts, sir?
So I think, the way Arun described it, the survey was done at the beginning of the year, and we were just coming off the major implementation of GST. So I can understand why there was some degree of cautiousness. But when I look at the optimism right now, I actually feel very confident. And in fact, the last couple of quarters have been extremely strong. I mean, the unique position HP has is we serve virtually all customer segments, whether it's consumers, SMBs, or even enterprise and government customers. And right now we are seeing great buoyancy in the small and medium businesses and the consumer segment. Enterprise, I would say, is the slowest growing right now, and I think that's a reflection of some of the sentiment that you're just talking about. But I do think the optimism or the sentiment has improved over the last couple of quarters.
Sure.
So I actually feel really optimistic, and I see 70% as a very good number. It's more than glass half full in my view.
More than half glass full, absolutely. So let's get to the other point. Mr. Kumar, 66% of the CEOs see territorialism as a major threat to their organization's growth. Can you explain that?
Yeah, there are multiple.
What do we mean by that?
Yes, so threat and opportunity. I'd say the threat is what we're hearing about tariffs and policies from many parts of the world. That certainly is disruptive. So that's a big issue that CEOs have to confront with. This was not such a big issue a year ago. It's very much front and center this year, not just for Indian CEOs, but globally. But what Indian CEOs are also doing is looking for opportunities in that. So, for example, Brexit. I think IT companies are finding that maybe there's an opportunity, especially when you're serving the financial services sector, to reconfigure systems, to do new outsourcing, because they have to be reconfigured to cope with Brexit. Similarly, Indian companies based in the UK are looking at what should their future plans be, should they expand there, etc. So it's interesting that while there are these kind of protectionist headwinds, CEOs are looking at how to make the most of it. The second part is in terms of geographic expansion. Indian CEOs and global CEOs are looking more at emerging markets than the developed markets. A couple of years ago, there was much more interest in investing in the developed markets. So today, they're looking at Latin America, Eastern Europe, and Africa. And Indian CEOs are doing the same as global CEOs.
Although, I mean, even over the last fortnight, we've had two very big acquisitions, both in developed markets. But that is,
Yes,
the point you're making is
right.
a broader point. Mr. Shah, in your interaction with India Inc., I mean, you also lead FICCI. Does this come out as a big concern? Or, I mean, do people see this as an opportunity broadly?
I think it actually varies from company to company and industry to industry. But clearly, I think Indian companies are setting up manufacturing facilities outside of India to cater to local market, because the expectation is that the trade war and the boundaries will go up. So if you want to cater to a particular market, it's actually better to have a base out there. And we are seeing more and more companies also doing that. We're seeing a lot of companies in India also starting to look at acquisition of operating assets. We have seen all the NCLT cases that have been there up till now. There has been a huge amount of interest and even the pricing that we are seeing for those assets are at least 10 to 20% higher than what we all would have thought about a year ago. So I think there is a lot of interest. People are starting to see growth. But as I said earlier, because of the headwinds, they are, and also headwinds and the recent past, because GST, demonetization, Indian economy has gone through a fair amount of turmoil. So people are not euphoric and are not very gung-ho, but they are actually starting to experience uptake and expansion in profits and all. And it's not just the large corporate. I think the small SME, like we have a SME loan book in Edelweiss, and we are seeing a huge amount of interest in SME loans, and MSME is borrowing. They're seeing business opportunities now emerging more and more.
There is, by the way, you mentioned M&A. There is an interesting takeaway on M&A as well, which I'll just get to in a bit. But Mr. Chandra, on the point about territorialism, yours, HP, is a global business. Global growth, US growth. Yep. We just got US GDP numbers for the second quarter, 4.1%. I mean, it's very strong, but at the same time, you've got all these, at least as far as conversation goes, and sometimes in reality, these trade barriers going up. It's kind of getting difficult to do business. But what's your sense? Many say, well, India is not that large a player to really get impacted in any significant way. But your thoughts, sir?
Well, I think, the way we look at, there's a lot of change happening in the world right now. Across pretty much every continent, you can see a lot of change. And I think we look at change as opportunity. And I think global companies tend to be pretty well hedged. They have a portfolio of different country exposure. So I think while one country does maybe not so well, I think, you balance it off with other countries that are doing well. As far as India is concerned, I agree. I think there is a lot of opportunity, and I would say India, to a large extent, is probably hedged from some of the turbulence you're seeing in other parts of the world. So I actually continue to believe there is a lot of opportunity ahead across pretty much all sectors in India.
Okay, on that note, let me take a very quick break, and we come back and we'll pick up on the M&A point. There's an interesting sort of finding. I'm going to give you a teaser. Most CEOs, I mean, the survey finds, they are not looking at M&A as their primary strategy of growth. They're looking inwards. They're looking at organic domestic markets for growing. May not come as a surprise to many of you, but take that break. We're right back. Welcome back to our special show. We are discussing the KPMG CEO Outlook Report. This is the 4th edition. We're in conversation with Arun Kumar, Chairman and CEO of KPMG India, Rashesh Shah, Managing Director and CEO of Edelweiss Group, and Sumir Chandra, Managing Director at HP India. Gentlemen, once again, thanks very much for being with us here. We got through a couple of points before we took that break. I want to now come to another interesting finding, and this is with regards to M&A. Mr. Kumar, if you can detail this out and flesh this out a little bit. The survey says that CEOs in India are less likely to take the M&A route to achieve their medium-term growth objective. Right. Why? I mean, is this because valuations are high, or there's enough opportunity back home?
First of all, the big focus was on agility, how to grow. A lot of that was growing inorganically. A lot was growing geographically to new geographic territories. And then, in terms of organizing through alliances, to capture markets through alliances, of doing it yourself. So if you look at the survey, you see that the focus on alliances and the ecosystem is much higher than it was before. But I must also point out that there's a big difference since the survey was done, which is the whole stressed asset situation. So we are going to see a lot more transactions happen, which really are a different form of M&A. So that's, I think, a pretty significant change since the survey was done, and I'm sure that Rashesh will have much to
But
say
did
on
you
that.
ask a question specifically about the opportunity they see to the Indian
No, but
CEOs in
remember that
the
this was
stress
done-
assets?
Well, no, the question was about M&A, and the timing of the survey
Generally
was
about
early.
M&A, okay.
Yeah, the timing of the survey was
And
early.
since then, many more deals have happened and things are starting to pick
Since
up.
then, changes have occurred. Yeah.
Would you agree with that?
Yeah, I think there is interest in M&A, but as you said, current valuations are fairly high, so people are not, very gung-ho about paying huge valuations. But for stressed assets, there is a huge amount of interest, and obviously a lot of the stressed assets are in steel and cement. These industries are clearly seeing an uptick, and setting up a steel plant is a 5-year project for somebody to do a greenfield one. So there is a lot of interest in buying and operating, an established plant. So we're seeing a lot of interest in stressed assets. As you said, there is increasingly interest in acquiring globally also to get a base in other markets because of all the trade wars and the barriers coming up. So I think also in the last 4-5 months, I think the confidence of Indian CEOs has gone up. So maybe when the survey was done 5 months ago to now, the animal spirits have started to come back. The optimism is coming back. Quarterly results, first quarter were the quarter ending March was fairly good. This quarter also, the results are coming out fairly good. So I think Indian economy is on an uptick, global economy is on an uptick. Some macro headwinds are there, but I think most of the Indian CEOs that we talk to, they have always operated with macro headwinds in India. In India,
There's
inflation has always
always
been
some
high,
headwinds, yeah.
government fiscal deficit has been there, liquidity is low,
Yeah.
and in spite of that, over the last 20 years, companies have done very well.
Correct.
So this is not an unfamiliar territory for Indian CEOs.
Right. Because, you yourself are so active in the stress assets space. Edelweiss as a group is so active, and you advise on transactions, etc. as well. Do you believe that M&A transactions which may happen at this stage, and large M&A transactions, which we've seen 2 of those recently, without going into specific situations, are in a way coming at a cycle high? When I say cycle, I mean like global cycle high. Because markets have been very buoyant, and that lifts everything, right? Valuations, prices, everything. Are we coming at a high, and maybe it's going to go the other way?
It's very hard to say whether cycle high or not, but what we are seeing in most industries, whether it's steel, cement, aluminium, all of this, the cycles are getting shorter and sharper. So companies are also comfortable buying, because even if you're buying at the high, there'll be a downturn, but it won't last for 5 years. It will last for a year or 18 months, and they'll come back again. So we saw a very sharp downturn in steel in 2015, but it was an 18-month downturn, and the last 18 months have been very good. So
And we're back at all-time highs.
I think
in a
the
way.
global cycles are getting shorter, but the good news is global economy is on an uptick, whether it's US, whether it's Europe, whether it's Japan, India, China. I think there is good economic growth in each of the regions of the world. India is also experiencing an uptick, having come out of GST, demonetization and all that. So I think given all this, people are confident that if they buy something now, they will manage it. And if there is a little bit of downturn also, people have contingency plans to manage it, because this won't be very long ones.
Okay, fair enough. Mr. Chandra, any thoughts to add to this? Mr. Shah began by saying that valuations are high. To do deals, you have to pay top dollar, maybe more than top dollar.
Yeah, and I think the way we look at it in the tech sector, we have presence in 150 plus countries. So for us, M&A is less about market acquisition. It's more about acquiring certain technologies that we may not have. And a good example of that is last year, HP acquired Samsung's printing business for more than $1 billion, which gave us access into a new segment, the copier segment, which is a $55 billion market. So I think what we see is companies getting into adjacent areas and using M&A more smartly, while there is a lot of opportunity for growth organically within the country. So I think companies are getting a lot smarter about how they use M&A.
Okay, now this one is interesting. We're moving on to the next sort of finding in the report. The survey finds that 40% of the CEOs find it difficult to understand how millennials' needs differ from older customers. Millennials are essentially people between 17 and 35, broadly defined as that category. And 40% of the CEOs say that they find it difficult to understand their needs. And this is, of course, an extremely influential and fast-growing segment of the population which most businesses want to target. Mr. Kumar, this is interesting.
Right. Well, we have a very large population of millennials. I would hazard that the majority of our firm, well over 50%, would be millennials. So we have to look at them very differently. We have to we do things like creating communities for them, creating flexible working times. Their aspirations are different. The good news is that the millennials are more attuned to the concept of a higher purpose. It's not just about a job. So to appeal to the millennials...
But that can also be a challenge, I mean, in a different way, right?
It's a challenge, but I actually personally think of it as good news. We were just chatting about multiple stakeholders. So it's not just about, what you earn for yourself. It's about how you contribute to society.
Sure.
So I think there are many positives that are coming in with the new thinking of the millennials, and to serve them, that the whole approach of their needs, the individualized needs, etc., will drive the way businesses look at them.
I mean, you and your business essentially are going after this pop category, right? I mean, that's where the spending is.
I think even for us, actually, the entire millennial opportunity is both on the customer side and the employee side. Out of 11,000 employees of Edelweiss, the average age is about 28 years. So there's a large population which is between 25 and 35, at least in that, from our employee standpoint of view. And their needs are different. I think all over the world, the millennials are changing. They are more conscious. The
concept of money is also different. Ownership of assets is different.
The concept of money is different. Their concept of what they are looking for, but they're also very value based. They attach a lot of value to being appropriate and being conscious of the environment and all that. And we're seeing that in customers also. Earlier, somebody who was under 35 was not a big buyer of any financial services, not a home loan, not a broking account, not a mutual fund, not an insurance product. But now we are seeing that people in the late 20s and early 30s are also buying it. And like all other companies, we are adapting to the needs of that customer segment. They are a lot more online savvy. But they also do use, they talk to people and they also talk to advisors. So they need what we call an multi-channel. So they will, when they want to go online, they want to go online. When they want to talk to somebody, they want to talk to somebody. When they want to meet somebody, they want to meet somebody. So you have to construct your business in such a way that the customer is one, but the channels of servicing that customer, interacting with the customer, has to be a really multi-channel approach. And the millennials are very comfortable with that. They switch from one channel to another very smoothly, while the older generation, people of my age group, if we are used to meeting somebody and doing business in that way, we'll continue to do that.
Sure. Mr. Chandra, I mean, the best way to connect with that age group is to appoint somebody in that age group in a leadership position, would you say?
Yeah, I definitely think that you need to have a good representation of millennials within the organization, and I think India has the benefit of that demography.
Right.
But I think the way you reach out to these customers changes. I mean, online becomes important, digital becomes important, social becomes important. The way you market to them has to be much more authentic. So the nature of marketing changes. So there's a lot of and I believe the millennials are really an experienced generation. So we're designing products which are more experience-oriented, better designs, more enabling of collaboration, which they are much more comfortable with virtually as well as in person. And then also we're looking at new ways of consuming products. They're not necessarily high on ownership. So can we create consumption models, new business models? So I think a lot of interesting challenges, but it's pretty exciting, I think, to have millennials in the organization and to serve them as customers.
Well, we don't have a choice, do we, in any business for that matter. Thanks very much, all of you, Mr. Chandra, Mr. Shah, Mr. Kumar, for coming down to our studios and taking us through a very interesting report. Thanks very much for watching the CNBC TV18 special.